So, a very good morning to everyone. Hope it's been a good one. We're very excited to be here and have made our ways across the globe to reach Helsinki. So today we're going to be discussing the capital flow through deep tech VC landscape. So something we're very passionate about and something that's also very topical in the ecosystem at the moment. And Julien here is a former digital and sustainability entrepreneur with 10 plus years of experience in deep tech. And currently, Julien is heading HXV Europe operations from Berlin. So Honda Accelerator Ventures is Honda's global open innovation and investment arm with 800 million allocated to deep tech and climate tech venture funding. And Shin is managing partner and co-founder at NordicNinja VC, the largest Japanese VC that is headquartered out of London and Stockholm. And Shin is currently based in Cambridge, UK, after spending almost 5 years here in Finland. And once a co-founder of Hydrogen Tech, spun off from the University of Cambridge, and he's very passionate about supporting deep tech founders to grow internationally. So we have both the CVC and LP VC perspective here today. And me, myself, my name is Nea. And as said, I head investor relations at Alliance VC, Nordic seed stage VC fund. Also have analyst background from Finnish Voima Ventures, deep tech VC, and a long background in fundraising and LP relations. So let's get started. As we all know, deep tech startups and VC investments overall is very cyclical and can be seen as some sort of a pendulum. And some people say, I'm not sure I agree, but that deep tech has been out for a decade plus or so when looking at global trends. But now the pendulum has been swinging to the positive over the past couple of years, and we see a lot more activity in the deep tech scene. So some arguments are that there is a consequence of correlation in other less tech-intense segments like consumer, SaaS, and so forth. And then some of the most hot verticals of today, like climate, healthcare, and AI, they really require real science and deep tech to develop and thrive. So if we have a start at a little bit of the global overlook, so how and where do you see capital flowing into deep tech currently, and are there any trends or hot markets, hot hubs when it comes to research or so that you have been identifying over the past few years? Maybe Julien, take a start. Throw you under the bus immediately.
Wow, thank you. How much time do we have? So first, Kitos, thanks for having us. Hello, everyone. I think we see different trends coming. So, I mean, there are maybe 3 or 4 questions in your question. So maybe I will pick a few topics.
Sure.
What we see. So first, there is an acceleration on deep tech. Of course, there are some technology drivers for that. The increase of computing power, etc. That's having an effect on a lot of sectors, including pharma, space, etc. for simulation. Not only AI and robotics, so that also unlocks a lot of new opportunities in terms of deep tech. What can we achieve today with small capital, and that's true also for bio and DNA stuff, etc., genetics, etc. So I think this creates a foundation for acceleration of deep tech. Having said that. Maybe we should step back a little bit, right? And we see a lot of technologies today which are commoditized, but come from years of research. So if you think about chips, computers, even the internet, like investing in the internet in the 80s, wow, that was a lot of science, a lot of risk. And now it's a commodity, so we don't even call it deep tech anymore, right? So I think there is a shift somehow, which is happening. What we see as well is especially in Europe, it's a very specific ecosystem. So in the US, everything is in the Silicon Valley. Mostly everything is in the Silicon Valley. Europe is an amazing ecosystem, very decentralized, and innovation is happening everywhere. You have great technical universities everywhere. Cambridge, of course.
Thank you.
Here in Helsinki, of course, but in also very small towns, you have some great technical universities with people coming with spin-offs, etc., which are very impressive. So one of the trends we see, at least in Europe, is less concentration of capital to adapt to that. We see also an increasing number of companies being created in all of the universities, research institutes, etc. But to go back to your maybe first point, I don't want to be rude, but maybe we can also look at deep tech as a very efficient asset class in terms of investing. There were a few reports recently which showed that the time to IPO, the time to market, the valuation, etc., is actually, all those metrics are actually better for deep tech than for apps, etc., etc. So we perceive it, the industry in all perceive it somehow at riskish, but the data shows that it's an asset class which is performing very well. And I would stop here because it's already 6 minutes of me talking, so sorry for that. Shin, please go ahead.
Okay, maybe let me add some points. Yeah, I agree that, so Nordic Baltics is really the core, especially for like sustainability, climate tech. I think this is one of the themes which is becoming important, why there's more investment in the deep tech. I know because I co-founded a clean tech hydrogen-related company, unfortunately in the 2014, so which is like a really end of the clean tech bubble. Then it was even hard to find the right angel investor around Cambridge. Then I couldn't get my visa, then I have to go back to Japan. Then I started NordicNinja about this anyway. So then, now I think that there's more like angels, smaller VCs who can put in some initial ticket for such kind of deep tech companies, and there's more fund managers who can understand not only the commercial risks but technological risk, and who can bear some risks associated with the deep tech. And I agree that the deep tech is maybe not that. Of course, sometimes it takes time, but on the other hand, maybe in Europe, like in the US, there's more in other ways to make liquidate the company, not liquidate the company, liquidate shares in a secondary market. There's a lot of buyers who can buy up the portion, even the majority of the company for the technological growth stage. So as the players, styles of the investing in the deep tech is changing in a good way. I think this is getting more traction opportunities. I really do understand there's a more good momentum for the deep tech founders in general.
Thank you. And maybe building up a little bit on some of the points that you brought up, Julien, with the big market opportunities that we who are true believers in deep tech can see currently, and the numbers that speak for it, then risk is something that always comes up, like you both also mentioned. So deep tech cases, unfortunately, in my opinion, tend to have the reputation of being very slow and capital intense in early stages, and the greater technical risk and commercial risk, at least to my experience, tend to make many investors who lack the technical knowledge or experience in this field quite cautious, and that creates a big bottleneck for this whole vertical. And how do you view risk tolerance and ability to take technical risk from investor perspective, especially since you two both are investing at different stages and have a little bit of different investor profiles? How can we convert some of the more cautious investors to tolerate this risk of this vertical?
Shall I start? Yeah. I think, our job is basically to take risks. But the good thing about deep tech or climate, well-being areas is the problem is huge. has to be huge in a sense. So then this is a question of the balance of the risk we are taking now for technology risk, commercial risk, and the huge potential in the future. I feel there's more understanding in general, even from the corporate side, that so there's so many. So we fundraised last year the second fund, but there's so many interest from the Japanese companies to see the Europe as like a new, let's say, new cluster of the innovation, sustainability, and there's more like inquiries these days how they can use, not necessarily to the Japan, actually it's more like there's more opportunities, commercial opportunities in like Southeast Asia, Asian areas, but then they like to create some like a business together with the European companies. So in this way, maybe in a sense, it kind of mitigating a risk. But yes, to come back to the maybe original point, yes, I think the fund managers like us have to tolerate with some like taking some technological risks. Even we are investing mainly Series A stage. Ideally, in Series A stage, basically there's almost commercial risks and there's less technological risks. But in reality, in the deep tech areas, still it's pre-revenue area in the Series A. And we have to understand what is the risks we are taking. But we have to really do the due diligence, of course. But we have to believe in the founders who can let's say, mitigate, overcome all the technological risks. So yeah.
What about you, Julien, as CVCs operate from a little bit of different perspective and sometimes a different time horizon as well as VCs, especially more early stage investors. How do you look at this problem and how do we make the ketchup bottle burst?
Okay, I try to make an answer in less than 6 minutes. Very concise, I will get some inspiration from you. So I think two things. One is, first, we don't do the science risk. We invest seed to Series D. We are quite flexible. 1, 2 to 10 million would be the, let's say, the ticket size. And we don't do the science risk. So we would come in when it's more about engineering risk, right? So the science is proven, and then we need to, make it work, scale, etc. So it's a different type of technological risk that we are taking as a corporate investor. One risk, which is often underestimated by deep tech founders, is the business risk. I agree with Shin. We need to have a huge problem to solve. We need to have a product, but we need to understand what kind of channels we are building, etc. And I think while you are in the lab, building your thing, a part of your organization needs to understand where the market is. Is it a B2B, a B2B2C? Is it a licensing, etc., etc.? That's very important. So it has to be parallelized as well, and that's also very, very important risk, I would say.
And then from there, I think it's quite logical to move to the second big argument that I feel always raises when talking about deep tech investments, and that is timing and the difficulty with matching very science-based cases with the requirements of funds and fund cycles. So the basic fact is, when it comes to all startups and all companies, is that they need to scale and get big enough through their lifetime to be a good portfolio fit and to be attractive enough for investors to take the risk and put in their money. And of course, VCs and CVCs have a bit of a different role here and a different stage in these fund cycles as well, but it's complementary in a way. So how do you view that the gaps in funding at these different stages and the pressure to match these fund cycles that come from the investors, how can those be tackled, and maybe what type of other funding sources can there be to complement this and maybe solve the problem to some part?
Yeah, I do see there's a lot of complementary, and sometimes as a VC, we are contractually set up for example, I can say that our fund is like 10-year time horizon, which is which looks like long enough, but in a later stage, it is not like let's say if we invest like a fourth year, fifth year of the cycle, it's only the 5 or 6 years remaining. So this is a bit tricky part and the truth of the VC's business as a business. So we have to, in a sense, think about always recycle. So that's part of the test. So we have to take a risk, but also we have to think about all the time horizon. Sometimes not always all the CVCs, but some CVC can wait, be more patient in some time horizon wise, and some like evergreen style fund, which can basically recycle in the fund for the longer time, they can be torrent. So then you have to really, if the founders can select, you have to really ask yourself, is a VC, or this VC is the right partner for your journey? Sometimes even the counterpart people would be nicer and good for the fit, but still sometimes the VC's fund setup cannot allow to do the full help, full support for the founders. But what do you think? How about how Honda works for this kind of time cycle issue?
Yeah, so first, as a disclaimer, I have to say that Honda is a happy partner of NordicNinja since maybe 5 or 6 years.
6 years almost.
6 years, yeah. So that's a coincidence that we are on stage. But very, very happy to share the microphone. I think in general, I agree with Shin. We have there is a very symbiotic relationship between the CVCs and the VCs. They are very complementary. They bring different aspects. As a company with 78 years, we are very patient. I have colleagues working on products that will be on the market in 8 years. So when we talk with a fusion company, with a 10 years horizon, okay, we are used to it. So there is a good match with the deep tech. I think tapping into the CVC part can be also interesting in terms of business, go-to-market, expertise. We have a few cases where some of our engineers are helping some of the portfolio companies building some plans, etc. So that's also something the CVCs can bring. But I think even beyond the VC and CVC, there is a lot of non-dilutive funding which is available. And that's a very important pocket to tap into, I would say, in terms of extending the runway, etc. So there are some instruments which are available now, and VCs and CVCs are usually supporting in having access to that, and that can be banks, local banks even, or big European institutions. But that's a key part of the capital stack.
Very good. And I feel like then again, if we look really at the top of the funnel when discussing funds, then of course we have the LPs, and I think that many of us VCs sometimes when it comes to funding, we tend to get a little bit too stuck up on the pressure that we feel that LPs create in returning or creating returns and having some early DPI and so on. Of course, that's always spoken about, but then most of the LPs are still focused on maximum returns when they make fund investments, and I feel that then again, even though the time horizon would get a little bit longer than anticipated, if you have great winners, there usually is some flexibility there as well if you hold on to those last few companies, if you're going for the highest multiple. So I see that it doesn't always have to be as strict as we sometimes tend to explain it away in a sense. A little bit to continue on this, now we focused a lot on venture capital funding and then CVCs on the side of that, but then public funding is obviously also a very big part of the ecosystem, and maybe especially Shin, since having a background in Cambridge and seeing that close by as well. How do you see the effectiveness of public funding currently in especially Europe, and where is the most crucial role that it plays, especially in early stages? And is it as lacking as many at least startups complain, or on what horizon do you see there?
Yeah, I think it is important. I think it was important, but it's getting maybe more important in a sense. Even we have some good examples as a NordicNinja. So we recently led one Series A cases from Finland, the Onego, the biofood company. But the round is getting massive, including grants. It's getting more than 40 million euro which is a rare case, but still the grant is important to like kind of mitigate all the direction for the founders, everything, and for the company still can develop technology and scale up technologies and everything. But grant has also, in my journey, personal journey, was very important because my co-founded company a long time ago was supported by Climate Kick, which is because the UK was still part of the EU back then, but part of Europe. So it was very important to have like buying some initial facilities, even for the early stage. But even like later stage, like Series A or Series B stage, it is actually also important to, let's say, pumping up the round size a bit so that the founders can take more risks under the a bit still uncertain global market ecosystem. It is, I think, the role is crucially important, but also the maybe funding provider has to select right VCs, right CVCs to partner with, in a sense, consortium with this VC, CVC funding, grant, and maybe some a bit later stage venture debt, like a more larger debt. This kind of all this journey or creating a consortium is maybe more important for the deep tech startups, deep tech founders than the normal startups, I would say.
Thanks. And then now we've been covering the topic quite a bit from the investor's perspective, but then if we empathize a little bit more with the founders and the problems that they face, especially in the initial stages of founding companies and going from research to actually building a scaling business, there is often a little bit of the paradoxical problem of very great research breakthrough or novelty innovations that are created by the best scientific teams in the world. They sometimes are then looking for the right concrete problem to solve or the application for the product and lack the experience of running a company, commercializing it, building a team and so forth. And then again, when we look at the stereotypical startup cohorts, they again often start from a problem that they want to solve, they had identified, they see a market opportunity, but then might be lacking the depth in technical knowledge that it requires to really build something groundbreaking. And there is a little bit of a cliff in between there. So how do you feel that both research teams and then maybe more experienced commercial founders should align to create more of these amazing success stories that actually also have a great impact scientifically?
Yeah,
it's a tough question, and it's a big question.
Okay, we have 7 minutes left.
Yeah, okay.
I take this one.
Attack.
Yeah, let's go. No, first, I mean, we are both former founders, so we empathize a lot with founders, I guess. So there is no framework or something. I think there is a huge stretch between being a researcher and being a founder.
Exactly.
For sure, that's a stretch. I have plenty of examples of PhDs which grew in their CEO role, and now they are able to manage the fundraising and creating the organization, sales, etc. And in some other cases, I'm actually looking at a very early stage company. The founding team has maybe 70 years average. One inventor, two not startup-ish. So they understand they have a big stretch, and the pace they need to have to fit into the VC metrics, they will not achieve. So I think the first thing is to be aware of the journey. And the journey is not like finishing the tech. Actually, that's maybe chapter 1 or maybe even before.
This is a very good point.
So you need to be aware of the overall journey. You are thinking about building an organization with departments, etc. And you need to see yourself as a founder. Where do you fit? And maybe in some cases you can grow and you would like to be the CEO. Maybe in some cases you can be CTO, CSO, whatever, or maybe you can also become just a founder and still a shareholder. That's already great if the company is successful. So at some point you need to be aware of the journey, and you need to be mindful of what you are able to do and willing to do, because that's a 10 years plus commitment. So your ego, the title, etc., you need to be aware that it's just a title. What is important is what motivates you, because you need to be there every day, at least 10 hours per day, right? So yeah, that's maybe just one hint. And Shin.
Oh yeah, thank you. So yeah, from the founders' perspective, well, if I have to compare the founders who, let's say, survived the journey and after 10 years of my past experience, the founders are either very flexible to listen to the different opinions from potential customers and try to find the customer, how to really solve the customer problem. So making this kind of shift is very mentally very important, but it is also sometimes very hard for like a scientists, like researchers. Then the alternative ways, of course, you have to find the right, as you mentioned, the right partner or somebody who can really do like creating an organization, attracting the capital. This is another skill set which is rare, also which is very hard to develop in the later stage of the career. So that kind of, then you have to find the right co-founder, right partner altogether, but who still you can you can trust, and you can do the journey. Then maybe the question to the founders you have to ask yourself is always, what is the most important thing? Would you like to control everything by yourself, or would you like to create a decent company which runs, maybe not a unicorn something, but you can generate a good cash flow? Then you can maybe pay buy a large house and everything. This is also important. What is the important thing that this kind of entrepreneurial journey? Because then also the next question is, what kind of investor can really support this kind of journey? Investors and partners.
Yeah.
Right.
If I can add maybe something.
Of course.
That was a great point, and I think the setting of the right cap table is very important. I mean, of course, there are some challenges, so it's difficult to be picky if you're struggling. But at the end, it's like a marriage, so you will commit for a relationship more than 10 years. And you need to be aware of the personal relationships, but also the companies and what they can bring in terms of complementarities. We didn't touch on the regulation or regulatory part, which is sometimes quite embedded in deep tech, because you're talking about like new markets, new technologies, etc. And having investors who are able to, support you on your journey, can be on the funding, but also talking to regulators, addressing US markets, Asian market, whatever. That's the kind of cap table you want to build. And at the end, we're talking a lot about metrics and returns, etc. I'm not sure if this is what motivates you, but I mean, I know you a bit, and I know it's also a people's business, right? So it's from an investor point of view, we are very excited when we see great science founders with great technologies, and to be part of their journey, how they can grow, how they can surround themselves with great colleagues, etc. That's very motivating also for us, I think.
That's great, and maybe tying to that, unfortunately, we tend to have the reputation of our most common word from a startup perspective to be no, and yes, that is a fact. I think we all agree that not all cases are a good match for VC in any way, and I think that we are the first ones to admit that we are very selective, and it's challenging to find the right fit for both parties. But 1 minute, last advice for the founders who are now banging their heads against the wall, thinking about how to raise their first round, how to get that first injection of capital after having identified and building that vision, what they want to do. So what's your advice for the ones exploring different funding paths and thinking about what first investor to team up with?
I think, maybe I'll try to make it short. Basically, as you fundraising have a cycle, so VC is like investor has also different cycles. You have to understand, maybe you have to start building a relationship maybe before, much earlier in a sense. Even though you don't have to show everything, but you have to show this is what you like to do. Then let's catch up later, 1 year later. Then we can keep the eyes on you. Then we can have like another discussion going on. Then we can build a trust together. As Julien said, this is kind of marriage-like commitment, both sides.
Fully agree. Julien, any last tip?
2. First, get out of the building. Nothing will happen in your lab anymore. I think that's a key learning. And the second thing is that probably not far from you, in your university, in your research institute, you have some supports. So start there.
Great.
Right on time.
Oh.
Excellent. Thank you very much. Let's give a big round of applause to our panelists.
Thank you.
Thank you.
Thank you. Hopefully you got some food for thought in regards of funding in this bit challenging market. Thank you very much.
Thanks.
Thank you, Nia. Thank you.